Hello and welcome to BQ Prime. I have with me Mr. Saugata Gupta, Marico's MD and CEO, to walk us through the company's first quarter earnings, as well as to give us guidance for the entire fiscal. Thank you, Mr. Gupta, for joining in.
Thank you.
The June quarter numbers were largely in line with the estimates. Net profit was up 16%. Revenue at 2,500 crore was down marginally 3%. Margins saw a smart recovery at 23.2% compared to 20.6% a year ago, and underlying volume growth was 3%. So, Mr. Gupta, what we understand is that weak demand continues to be a key bottleneck, especially in the rural markets. I would like to know how do you see things shaping up going ahead?
Firstly, I must say that demand obviously has been improving trend. I think as far as rural is concerned, also worst is over. Uh, if you look at the overall FMCG category growths, they have been gradually improving both in urban and rural, and HPC growth is improving. For us, we had two one-offs. One was, of course, the destocking in Saffola. As you know, that Saffola, the edible oil price table continued to be volatile. That led to a significant dealer destocking. The other thing which we have been doing is what affected Parachute and value-added hair oils growth is our equalization of trade inputs, which we are now doing to smoothen the high Q1 skew, which we always had historically. And so I would still think that overall, if I look at offtake trends, if I look at market share trends and penetration, things are definitely improving. And when we said the rural green shoots are still, we have not seen is that overall market has grown, but because of the fact there is still some stress in terms of bottom of pyramid competitive intensity, as well as some of the smaller local brands being hyperactive, especially during deflation. But now that we have significant, power play in terms of ability to, in terms of both pricing as well as local activation to drive demand generation, we are extremely confident that the revenue growth, both the volume growth and revenue growth, because of the deflations going down, will improve as we go from Q2 to Q4.
Okay, but given that commodity prices remain stable, so can we expect a double-digit volumes this year?
So I think, as I said, the volumes will only improve, and it's very difficult to give any outlook on volume. But all I can say is that the volume growth will only improve from what it has been in Q1.
Okay, and so what would be the outlook on the revenue growth trajectory?
So as you know, the revenue growth has got impacted because of one is deflation. Also, there has been a currency depreciation that leads to a translation, impact in your top line. And now the deflation will neutralize as we enter the second half. As for the currency is also concerned, I think unless there is any black swan events, last year the depreciation started significantly more towards end of Q2 going into Q3, Q4. And that impact will also get to somewhere much more milder. So we expect revenue growth to be in the positive territory as we exit Q2 into Q3 and Q4.
Okay, and so margins have seen a very smart recovery. So, do you expect this to sustain the kind of recovery to sustain, in the first that we have seen in the first quarter going ahead? What is your guidance?
We are pretty confident of delivering 20% plus operating margin for the full year. As you know, historically, Marico's highest ever in the history has been 20.1. We hope we can surpass that. Having said that, we will continue to ensure that we continue to fund and invest behind A&P. As you know, in the last 3 years, we have done a significant diversification journey, especially in our India business, where the new part of the business, which is foods, digital, and some of the premium personal care brands, are expected to contribute to 20% of our business as we exit this year. And therefore, we will continue to invest behind A&P. So some of the gains which we will do will obviously go into some into pricing, some into A&P, and the rest flow through margins. And given the current trends, unless there is some black swan or something, we are pretty confident of delivering 20% plus for the full year.
Okay, so if I have to look at the key focus areas, like premiumization is one that you are actively looking at. We have already discussed about this in the previous earnings call as well. So if I have to look at the key focus areas, can you highlight 2 to 3 focus areas that you will be looking at for this fiscal?
I think as I said, that the core has to start growing now, I think, and therefore protecting the core is very, very critical, and therefore getting Parachute and value-added hair oils into the growth phase. That's the first thing, because ultimately, we need to be in a space where we continue to, protect market share and penetration of our core categories. The second, obviously, is the diversification, premiumization journey, and in foods. The third focus area is while we are doing the diversification, we have to ensure that we continue to invest behind this diversification, but at the same time, significantly improve food profitability, because at the end of the day, that if it constitutes a significant portion of our top line in the future, we have to ensure that the food profitability is in line with our overall, broad gross margin. I mean, not the gross margin, but the overall EBITDA margins of the business over the long term. Digital cash burn reduction, and while there are stresses in some of the markets in the international business, how do you ensure that we drive double-digit constant currency growth in the international business and continue to be resilient there? So those are the perhaps the big thrust areas as we go from Q2 to Q4.
Okay, and in terms of acquisition, you've recently acquired the plant-based nutrition brand Plix. So what would be the revenue contribution from this brand and also the newer acquisitions, the new businesses?
So I think Plix is doing a run rate right now of around 150 crore plus. So unlike the others, this is a slightly scaled up thing. And also what is interesting is the cash burn rate is pretty low. And we believe that nutraceuticals and functional foods has huge opportunity in India, provided that it gets into the right kind of positioning so that penetration increases of this category. And we also like the founders, and we believe that this has significant potential for contributing to our long-term growth journey.
Okay, so overall, do you expect the food business to become bigger than the edible oil business as a percentage of your revenue?
Time in the next 3-4 years, I think that's our aspiration. In any case, the food is more margin accretive. So long term, we are actively ensuring that we continue to gradually reduce our dependence on commodity-led businesses. So that's been our endeavor. So maybe 3-4 years down the line, it will happen.
Okay. So also channel-wise, we have seen that the general trade continues to see a decline, of course, primarily on account of the slowdown in rural consumption. So is Marico taking any specific measures to improve sales through this channel?
I think we are extremely focused to ensure that we believe long-term general trade is also going to coexist and grow well. I think there is no reason to believe that general trade. I think we are working aggressively towards ensuring that we continue to expand distribution, quality of distribution, manage effectiveness of spends, and also working with our distributor partners to manage their return on investment. Obviously, when there is revenue decline, as you know, that there is a stress in the return on investment. So we are working actively with the partners. We also continue to invest behind technology and in a big way, and digital in a big way, so that we drive far more effective selling. And we are pretty confident that as we move into the second half of the year, we'll turn the tide and get general trade back into growth.
Okay, also can you give us a sense of what is the kind of investments that we can expect from the company for this fiscal?
Investments are largely in line, as I said, and I think we have now enough on our plate. We have done a couple of acquisitions, so I don't see. I think, as I said, that I think it's important to now consolidate, get the scale on these efforts. So I don't see any more significant investment coming in the balance year.
All right. Okay. Thank you so much for talking to us. Wishing you all the best.
Thank you so much. Thank you. Bye bye.